This is part 2 of the discussion on the accounting cycle of merchandising business. In the last video, we stopped at posting the adjusting entries, and now we're going to prepare the adjusted trial balance. And I have a space here for the adjusted trial balance. I will place it on the left side and then prepare the financial statements later on the right side. So let's start with the heading. Now we transfer our account titles. And then we get the amounts. And this is our adjusted trial balance, which we will use as a basis for our financial statements. So I'll start with the income statement. Since this is merchandising already, you start not with service revenue but with your net sales. Let's do a note. I'll just place it here. Get your sales and your sales discount. Place it here. So let's cancel these account titles. Next, compute your cost of sales. Let's do a note. For this, you need your beginning inventory. You just started this year, so your beginning inventory is 0. And then get your net cost of purchases. You need your purchases. That's 25k minus purchase returns and allowances 1k minus purchase discount 480 plus your freight in 750. So your net cost of purchase is 24,270. You add these two to get your total goods available for sale. 24,270, and then deduct your ending inventory. But before I give the amount for the ending inventory, let's cancel the account titles we used. For the amount of the ending inventory, it's not 0. Most of the time, it will be given in problems. So here, the ending inventory is 15,000. You have to remember that if you are given this, you will be using it to compute the cost of sales. And then you will also be using it in your balance sheet because merchandise inventory is an asset. But you may be wondering, how come this is not journalized? It will be part of the books later when we do the closing entries. But right now, we are preparing the statements. You just have to remember that we use this to compute the cost of sales and also use this in the balance sheet. So the value of merchandise inventory end is 15,000. We write it here. Giving us the cost of sales. How much is the cost of sales? It's 9,270. We place it here. So you deduct that to get gross profit of 25,330. Since we don't have other income in the adjusted trial balance, the gross profit is also the total income. And then for the expenses, since we only have a few, let's just list them down. Freight out is also delivery expense, and freight out is part of the expenses while freight in is part of cost of sales. This is our income statement. Let me cancel the account titles we already used. Now let's prepare the equity statement. I will just keep the amount of income here. Net income is 16,247, and then I will erase. Now let's prepare the equity statement. And this is our equity statement. Now we do the balance sheet, but first let me just write the value of equity because I will be using it later. Let's cancel the account titles we use to make the preparation easier. Now we will be preparing the balance sheet. For both accounts receivable and allowance for doubtful accounts, you can prepare a note or you can just write them down. So I just write them down. After this, you don't total yet. You use the merchandise inventory and you are given. Write it here. And by the way, if you are given merchandise inventory beginning, you don't use that because balance sheet here is already at year end. And it follows that the merchandise inventory that you need to place here is the one at the end of the year. You can place equipment and accumulated depreciation in one note, but you can just write them down. So I'll just write them down. Anyway, they're just two account titles. And then for the liabilities, since you don't have non-current liabilities, you will just have to write these three, get the total. That's your total liabilities. And underneath, we write our equity. Then we erase this. Let's write it properly. Total equity. Get the sum of your total liabilities and equity. The answer is 129,247. Okay, so that's our balance sheet. After the financial statements, we do the closing entries in preparation for another year of operations. So let's have that. What you will do is get your nominal accounts and then make them 0. If you are given the beginning inventory, make that 0. Again, in the balance sheet, what you will write is the merchandise inventory end, not the beginning. And for periodic, you will always be given the ending inventory. And what you will do is recognize that one. This may sound confusing, but let me show you in the closing entries. I'll start with drawing. I will remove the 5,000 there. And And then sales 35,000. I will remove sales discount. Now all of the nominal accounts are 0. As I said, if you are given the beginning balance of inventory, you will just have to make that 0, meaning you will credit. I will just write it here as a sample. And then recognize your merchandise inventory end. So after considering what I mentioned here, you will now get which side is higher, debit or credit. Since our total debits are higher than our total credits, we will be crediting capital for the difference. And this is our closing entry. To update our T accounts, let's post. The merchandise inventory beginning here is just for template purpose if you are given that. And since I don't have a balance for beginning, I will just write 4. Anyway, it doesn't have any effect. After this, you get the post-closing balance of some of your account titles. Now let's do the post-closing trial balance. And then you get the total. Don't forget the peso sign. I think I forgot it in the adjusted trial balance, so let me just correct it real quick. So for the total, and this is our post-closing trial balance. This will be our account titles with balance on January 1, the start of next year, in preparation for another cycle, another operations for the company. And that's it for this video.